Right, the outside day reversal. Now, this is one of our little gems of trading. This is one of the things that if we see it, we trade it. There's not many patterns that we can actually say that for. A lot of patterns that you see, you think, there's a lot of factors that have to come into this to make my decision as to whether to go with this or not. But with this pattern, we have basically, instead of looking for justification why we should trade it, we look for reasons why we shouldn't, because it's pretty much if we see it, we're going to trade it. There are a few of these gem patterns, like we call gems, where if we see them, we always trade them, but they're all on the members section of our website. So if you want to know other ones like this one's quite common. You will find it in textbooks. It's quite a well-known pattern. The other gems that we trade aren't so well known. But anyway, what happens is this is a 2-day pattern. It takes 2 days to form this pattern. You have maybe a down day. So if we look at the first rectangle, the blue rectangle, on the left hand side you've got a red candle. So that's a down day. Once that happens, you're like, okay, it's a down day. We'll probably have another down day tomorrow or whatever. But what actually happens is it opens a little bit lower and it rallies and goes up and up throughout the day, and it closes above the previous day's open. What that basically has done is totally eclipsed the previous day. That is a reversal day, because what's happened is day 1, sellers were in control. Day 2, the price goes lower and buyers were so in control and so overpowered the sellers, they actually pushed the price way above what the previous day was. So that would be a good buy signal. Sorry, a good buy-in signal, not a goodbye, see you later signal. Anyway, right, so it goes up. So it worked, the pattern works. The next day it goes up, the day after that it goes up. But then what we have is another reversal day, because what happens is that the buyers are in control with the 3 green candles, and then the price opens upwards. So to start off with, that looks quite good. You know, it looks like if you're watching the share price that morning, you're thinking, oh, it's opened upwards, it's even got a little wick on top of the candle, so it actually goes higher. But then it turns around and it just dumps. The price absolutely dumps, and what happens there is it actually again eclipses the previous days. So the open is above the previous day's close, and the close is way below the previous day's open. So that is pretty much an engulfing pattern, and then the next day you have a down day. So it works again. But let's go into this in a bit more detail. So let's actually look and see this pattern in action. This is the US S&P 500, which is what we encourage people to trade when they only want to put a little bit of money on a trade. Right in the middle of your screen, we've highlighted a reversal day. What we need to point out here, we'll go into this in a bit more detail, is on the red day, the open is exactly the same as the previous day's close. Now, we just told you that it has to be above the close and drop and be below the previous day's open. That is a textbook example, but this still qualifies. If you get the same open as the previous day's close, as long as the close on the red day is lower than the green day's open, it qualifies. And as you can see, the next day we have a down day, and it ends up going lower. If we look on the right hand side of the screen, we actually highlight another one. This is something we'll go into again in a bit more detail. Normally, when you sit in textbooks and traders talking about this, they'll tell you that at the top of an uptrend you'll get a down outside reversal day reversal. But what we're actually saying is sometimes these work in uptrends. You'll get the pattern basically telling you buyers are actually still winning the battle, so let's buy. Gives you a green light to buy more, but we'll go into this in a bit more detail. Okay, so this basically we've highlighted some rules. Just pause the screen and read this information, and then we'll move on. Okay, so we touched on this earlier. This is just to highlight it again. You can have a on the green day, right? Let's be basic. On the green day, the base of the green candle on the left hand side of your screen is the open. It obviously goes up and it closes at the top of the green candle. Now the next day, the top of the red candle is where it opens, so it's exactly the same, but what happens is it drops and it closes below the previous day's open. That shows dominance still, so that is still a valid pattern and we would trade that. So again, have a quick flick through this. Okay, so as we mentioned previously, it doesn't need to be at the top or the bottom of a move to be a reversal day, because I mean, when we say a reversal, that basically means it's gone up, it's having a reversal pattern, and it's going to come down. But a lot of traders miss this example, the example that you've got here on this screen. A lot of traders miss this because they don't realise it's there because it's in the middle of an uptrend. So basically, you've got a nice strong uptrend, you have this pattern, and then what that basically tells you, it gives you a green light to buy. It's saying it's actually safe to buy because buyers are still dominating sellers. So this is a good thing, because sometimes it's a little bit risky buying into an uptrend because you don't know when there's going to be a pullback, and you don't want to buy on a peak and then there'll be a pullback for 3 days after you've bought. So a lot of traders like us, we wait for some sort of bull flag or something like this sign to say, you know, this is basically what we're trying to say is this is a continuation pattern, so it gives you the green light to buy more. Okay, so we've mentioned that this is a reversal or it can be a reversal pattern, but something that a lot of textbooks etc. don't really point out is that it may, well, what happens after you have a successful pattern? So you spot the pattern, the next day is a down day in this example. So what happens then? Well, actually, you may only get 1 day in the direction of what the pattern's sort of telling you where it's going. So don't expect it to be, if you see a downside reversal in an uptrend, don't expect the price to fall a good 10 to 20% and you make 10-20% on your trade, because it might not happen. It may only give you 1 day. It normally always does give you 1 day, but that might be all you get. Quite often you'll get more than 1 day, you'll get a couple of days, but I just don't want people to watch this video and think, oh, we've had one, that's it, we're going to make a good 10% on a short or something, because it doesn't always work like that. So just something to think about. Right, most important rule is, if you see this pattern, trade it. As I said, it won't work all the time, but if you can find a pattern on the stock market that works sort of 75% of the time or more, you trade it every time you see it, because nothing is guaranteed on the stock market, but this is such a strong indicator. You should make money, well, you'll definitely make money more often than not. Also, if you spot one of these patterns, tell us. Get on the website, contact us, and just give us a little heads up. We do the same thing for our members. If we see something like this, all our members will know about it. So if you see it and you're going to trade it, let us know, and we can all make a bit of money on it.